The construction market has been quiet, and since the projects that were completed in 2010 after the Soccer World Cup, the infrastructure market gradually declined. So much so that over the last year, it was the project coming to the market in the infrastructure space was almost negligible. So out there, fewer projects are coming to the market, and the ones that do come to the market are fiercely contested.
Absolutely. Fiercely contested to the extent where you are forced to take work that ordinarily you wouldn't want to take?
We did that a few years ago, and we paid the price. No, we are very selective what we price and who we price for, and I think it's starting to pay dividends, that the fact that even in a market where there is not so much work, to be selective. Yeah. And I think that your risk reduces so much, and your payment gets better. Yeah. And your profits also are more steady then. Absolutely.
Just going through some of the sort of salient points on this reporting period. I mean, I know our revenue is almost flat, 5.1 billion rand versus 5.2 billion rand the previous year. You look at the operating profit margin sitting at around 2.4%, and I'm wondering, has it ever been this difficult before?
It is tough out there. If you look at our construction and mining business, they consistently produce good results. But the problem we have is in building, that the market is very competitive in that market, because there are more competitors in that market, and also there are nowadays fewer projects coming to the market. Right. They are profitable, but not as profitable as we want it to be. Right. Then also our mining and electrical business, they also profitable, but because of the reduction in spend in the oil and gas, they are not producing the results that we want them to produce. But construction and mining, they're doing well.
Absolutely. So the 2.4%, where would you want it to be? Where does it sit comfortably with you?
What we would like to do is we would like to get the operating profit for our building business to be closer to 2.5% to 3%. We'd like to get our mechanical and electrical business closer to 5%. And I think if we can do that, we can get our operating profit to be in excess of 3.5% to 4%, so closer to between 3% and 4%. Yeah. And that's what we're aiming for.
Absolutely. So when you look through these results, are there any highlights for you, places where perhaps you can smile a little bit despite the grim picture that you see in other parts?
Yes, certainly. We invested, the one good thing about the fact that we invested in stocks and stocks at the time, well, way back in 2008, was when we got involved with the business in Dubai. And that business, for the first 6 months of the year, produced quite a nice result for us. And that helped us because it's an equity accounted business, and it helped us to improve our headline earnings per share relative to last year by over 40%.
And, you know, this is historical, right? I think what's important is that we talk about the future.
Good.
But when you look at the future, I see your order book is down at 12.8 billion rand.
It's correct. It's the lowest it's been in 2 years.
Yeah.
It is in a way of concern. Yeah. But what I can say, the order book that we currently have is a good order book. There's no risk attached to that order book, and all we need to do is to make sure that we get the necessary returns. It is not that the market has dried up. There's still opportunities out there, and on a selective basis with selected clients, that we can still get work. There's still work in the road space, not in South Africa, but in South Africa is primarily for private clients. Right. Outside the country, we do it for clients that pay in hard currency. Even in office buildings, opportunities both locally and cross-border. Recently, some pipeline projects came to the market, cross-border. So if you look at cross-border where the opportunities are, there's still good opportunities, because if you look at our company, 30% of the turnover came from outside South Africa. Right. And this year, or this for the first 6 months, 56% of the operating profit came from outside South Africa. Right. And if you include the UAE, 66% of our profit came from outside the country.
Sure.
So, which is good.
Are you saying thank you to the rand?
Well, we're saying that thank you to the rand as well, yes, but also the good performance outside the country.
Absolutely. And in terms of the split of that order book, how does that compare with the split in revenue?
The split of the order book is very much, let me just put it that way. Building turnover is down, and the order book is down as well. Construction and mining, the order book is down, but the turnover is up. But we expect some nice awards from the construction and mining, where we get better operating profits.
Yeah.
And we expect about another 4 billion rand to come our way within the next 6 months.
Yeah.
So yeah, things are looking a little bit positive.
So in part, the order book, of course, is speaking to the future a little bit. But when you hear the President Cyril Ramaphosa coming in and saying he's looking for FDI, he's looking for South African businesses to invest, are you seeing any movement on the ground in terms of people believing the things that he's saying and beginning perhaps to loosen those pockets again?
Oh, definitely. 2 projects. The one that was mentioned, was mentioned was Mercedes-Benz. We're currently working on the body shop in East London. Okay. That's a large project for us, a 1.2 billion rand project.
Yeah.
And we recently priced for Amazon in Cape Town, where there was also mentioned with the investment conference. So those things are starting to hit the ground.
Yeah.
Not all of them, but gradually they're starting to work.
What about yourself? Do you believe that things could be turning around, and do you believe the message the President is giving, that is open for business and he wants businesses to be chipping in?
I think there is a positive mood.
Yeah.
One just needs to see what's going to happen on the stimulus package as well, because at the recent medium-term budget policy statement, 92.5 billion rand was mentioned for infrastructure. We just don't know where and when, but we're positive that come the full budget, more money will be allocated. And with the investment in the private sector, I think maybe in the medium term, we believe there's going to be an uptick.
Absolutely. And I believe you're stepping down in June next year?
May next year, yes.
May next year, is
yes.
It? Yeah? Time to go and put up your feet a little bit, or do some cycling up the mountain somewhere in Switzerland or something like that?
Yes, I need to hand over the baton to people that run faster than me.
And when you look back, what did you say have been some of your highlights? Because I look back to the time when you listed, and I've sort of grown with the company in terms of covering, and certainly what I've seen over the years has been resilience.
Yeah, I think possibly it's not one particular highlight. It's just building this company to be one of the companies that really stand out in construction in this country. We've established ourselves as a competitor. We've established ourselves as a reputable company that produces good quality. And we get a lot of repeat business, and we established ourselves as a competitor on the continent as well. And that has been a process which I've been working on for years with a fantastic team, trying to make sure the culture of the business is right, trying to make sure that our own people believe in the business, and that's been a whole highlight of my career.
That's Willie Meyburgh, the CEO of Stefanutti Stocks.